we've got these cycles that have occurred in Bitcoin. 2013, 2017 are the most prominent, newer ones that most people are aware of. In these, we saw Bitcoin's price go up 10x, 20x, 100x from trough to peak. And then we saw, after that, it go down another 80% in the preceding bear market. Now, with this new cycle that we're going through currently, Bitcoin is far different than these other ones. In 2013, 2017, the macro markets were largely in a bull run. It was a bull market. Everything was going well. And so, these speculative cycles were basically a local phenomenon based on Bitcoin's having the halving events that occur every 4 years, reduce the amount of newly minted Bitcoin that are released to the market. So if demand stays the same or increases and supply has diminished, that the price tends to naturally go up, and then we see this speculative cycle occur. We could either see a more intense bull run as the whole world wakes up to Bitcoin's value prop. Bitcoin's TAM, or total addressable market, should place it as a per Bitcoin value of between $1 million and $10 million a Bitcoin. This could be one of the final cycles where Bitcoin steps in and is realized by the world as a global store of value asset. We could also see a flavor of the super cycle where we see maybe a normal bull run, but less of a bear market. If large corporates start buying Bitcoin, it makes it very hard for countries to ban it. Because if they start banning it, then it immediately causes a huge stock panic where all these different equities that hold Bitcoin would start to drop. And these are popular equities, like, for example, Tesla is held by a lot of millennials. So I think that, these sort of moments are really, really pivotal for Bitcoin to be perceived as a globally recognized money or a store of value asset. It's kind of a night and day sort of, it's like pre-corporates buying Bitcoin and post, really represent distinct stages in Bitcoin's development. When I was thinking about the super cycle theory, which I came out with over a year and a half, 2 years ago, I was thinking maybe, the big macro traders will start to buy it. That was kind of a big check mark for me as like Bitcoin being recognized as a global store of value asset. But then the corporates coming in, I think this was just a really surprising, really awesome, unexpected sort of movement that occurred very, very early. There's trillions of dollars sitting in cash or cash equivalents. And, all it takes, I think, the ARK Invest folks did some research and found if 10% of corporate treasury cash moved into Bitcoin, Bitcoin's price per Bitcoin would be around $400,000 a Bitcoin.
Do you think that we may just be seeing a risk-on trade? What's your reaction to that observation?
Yeah, I think Bitcoin is still becoming, Bitcoin's evolution, we've seen it be highly volatile and act like a risk-on trade for most of its existence. Bitcoin, however, in its final iteration, or what it is aspiring to be, is the risk-off trade. Bitcoin is aspiring to be a gold 2.0 risk-off sort of trade. And sometimes it reflects that. For example, Cyprus in 2013, when they started to do the bail-ins, Bitcoin started to pump in 2013 based on that news. That was the catalyst. When Donald Trump got elected in 2016, Bitcoin moved on that. Same with Brexit. So Bitcoin does exhibit some catalyst moments that it exhibits characteristics of a risk-off asset or a risk-off trade. However, I would largely agree that Bitcoin is sort of buoyed in this moment based on, we've seen a lot of, as the common fun term, stonks. As the stonks go up, the kind of like very frothy equities market, I think some of how Bitcoin is moving is probably because of that. As folks are looking across the world and looking to put money into different assets in a more frothy environment, Bitcoin is a very volatile, fun asset to go trade. So I'm not sure if we can cleanly classify Bitcoin's price movement as this is a folks piling into a more risk-on or risk-off sort of trade. It's kind of both, which makes it a really weird type of investment because it ultimately is gold 2.0, so it's a risk-off trade, but it's becoming a gold 2.0. So it's a speculative, as Jerome Powell puts it, it's a speculative store of value.
Well, what happens if Iran starts buying a bunch of Bitcoin, right? Or North Korea? Again, it's probably unlikely to be sort of a country that we embrace that will go first for the very reasons that they'll be attracted to Bitcoin. I guess that probably just ties back to your government risk, right? Does that agitate our government in a way that's unhelpful?
Correct. Bitcoin is the enemy of your enemy, right? And I see countries like China and Russia probably embracing Bitcoin first before the United States government, in terms of them buying it as like, we're going to hold this as one of our reserve assets, sort of replacing gold reserves that China and Russia have both stocked up on. I'm a libertarian, so I'm naturally critical of any government, but I do love the United States. I think the United States is a great shining example of how to go build and we have a lot of things that we can fix, but I still think we're a great country, and I would really, really love to see the U.S. step into owning Bitcoin and really owning this as an innovative thing, instead of like embracing Bitcoin versus bracing against it, hoping to hold on to their US dollar dominance, versus going, well, we see this new paradigm of this new sound money coming out. Maybe we could use this as an opportunity to keep America great, but also understand that things are changing and that we should embrace it.
You hear some folks say, well, if rates go up, that's inflationary. That's good for Bitcoin. If the economy sucks and rates go down, that's good for Bitcoin, because then there's nowhere to put your money. That feels like you're just looking for a bull case wherever you can find it. What do you think about the backing up of the 10-year, right? That's not generally good for long duration assets. Bitcoin is the ultimate long duration asset. I have my own thoughts, but I'd love to hear yours.
I think Bitcoin, as an uncorrelated asset, which was kind of a way that Bitcoin was framed before the Gold 2.0 narrative really, really sunk in late 2020 as an uncorrelated asset, Bitcoin is kind of a weird sort of asset. It doesn't really follow a lot of existing paradigms of like, oh, Bitcoin naturally will trade up or down given a certain catalyst or a certain other asset moving up or down. So I'm not sure if there's like an easy answer to describe Bitcoin's behavior as interest rates climb or as they go down. I don't think Bitcoin is old enough yet. It's only been around 12 years, but in terms of being like even sort of a base level of analysis or being liquid enough to be considered like a mainstream asset, it's a very new asset. So I don't think we've really seen that behavior. Now, we could look at other traditional assets like gold and be like, oh, maybe Bitcoin should mimic some of those gold characteristics. Or as people, as interest rates move up, we would see as gold has dropped, maybe Bitcoin should drop as well. But as we kind of described earlier, Bitcoin is simultaneously a risk-on, more technology investment, but at the same time is aspiring to be a risk-off Gold 2.0 sort of trade.
This is probably where I date myself. When I was in high school, the 10-year was at 12, 13, 14, 15%, and cash was as high as 20. So to me, 1.5%, 0.5%, 2%, it's all the same, right? It's almost like it's ridiculously low rates. It's hard for me to get really agitated about moving from 90 basis points in the 10-year to 140. It all seems ridiculously low.
And if we look at rates over time, over the last couple of decades, we've seen it continually decline, as we've just really seen quantitative easing and other central bank mechanisms distort, I would say, accurate market pricing of what an appropriate level of risk is. So we've seen sort of from that era back in the 80s, we had double-digit interest rates. That was really, really crazy. But I would say now is equally surprising with how low rates are, right? Like, you look at these interest rates on mortgages and everything else, and you're like, wait a second, why is risk priced so low? Did we come up with better ways to assess risk? And you look at this and you're like, this is insane. You can go out and borrow really, really cheaply, but the world hasn't changed how risk is manifested. Central banks have very much distorted that risk-reward mechanism in the form of interest rates to where I think the market's hugely mispriced.